morning, good afternoon, good evening, yWhales, wherever in the world you are today. So it is August 3rd, and over the past week, the cryptocurrency market has seen a mix of trends. The global crypto market currently stands at $1.17 trillion, with really a slight decrease of less than 1% over the last week. Bitcoin, the largest cryptocurrency by market cap, has seen a marginal increase of almost nothing, holding steady over the past 7 days at 30,000. It's turned into a relatively boring-looking stablecoin at this point. Ethereum, the second largest cryptocurrency, has seen about a 1.2% increase over that same period, with the biggest movers being XRP Ripple and Dogecoin at 7.5% and 5.7% respectively. On today's Web3 episode, we are going to be delving into the dynamic field of digital currencies. We're seeing large scrutiny in the exchange arena, race for dominance in the mining sector, and we have a great guest to be able to showcase that. Security threats are shaking up decentralized finance. Meanwhile, the non-fungible token marketplaces are trying to innovate a little bit with some direct verified peer-to-peer swaps, and new reports shedding light on the environmental, social, and governance aspects of cryptocurrencies. These developments highlight the emerging landscape of the industry and the challenges it faces from such innovative solutions that need to be implemented. I'd like to run through and give a quick intro to my guests today, which are absolutely fabulous and super exciting. Pablo, would you mind just giving a quick intro of yourself, and we'll roll from there?
Certainly, it will be my pleasure. And thank you, Jay, for having me. My name is Pablo Rodriguez-Fraile, and I do some primary activities in the digital world, particularly in the tokenized digital world. Most of the audience will know me in particular for my activities in the digital art ecosystem, where I've been one of the most active and engaged collectors or patrons of the digital art ecosystem, working together with artists and other collectors to push the movement that I think we are all aware of now. On another note as well, I'm involved in bringing infrastructure, and I'm also behind Airways, which is a platform that seeks to help digitally native artists deploy physical and immersive experiences on the physical world. And that's me in a nutshell. Yeah.
Fabulous. Great to have you, Pablo. Thank you so much. Allan.
Hey guys, great to be on. Thanks, Jay. I'm Allan Matheson. I am the founder of Golden Pear Capital, which is a crypto asset focused investment management company. I'm a successful, well, I don't know about successful, that's maybe arguable in some, but I've built and sold 4 companies, 3 of them successfully. And they're tech companies, so I've been in tech and living on frontiers for a long time. And I'm a DeFi degenerate, as we would call it. I've been in DeFi for quite some time and live it, breathe it, love it. I love the innovation that's going on there. So I've also done a lot of educating in the space, educating everything from YPO chapters and groups to business groups, boards, family offices. So I'm really passionate about that as well.
Fabulous. Thank you, Allan. And our celebrity of the hour, Mr. Fred Thiel.
Hey, guys. Great to be here as always. Big supporter of yWhales. Fred Thiel, Chairman and CEO of Marathon Digital Holdings. We're one of the largest miners of Bitcoin in the world. And according to CoinDesk, the largest publicly traded one. Spent 40 years in the tech industry, kind of across every aspect: software, hardware, semiconductors, firmware, internet, data comms, pretty much you name it, digital games, etc. Just passionate lover of technology and big believer in what blockchain can bring to companies and to industries as we continue to see this kind of blending of things like AI and further progression of automation in things. Spent a lot of time in the IoT world, Internet of Things, and AI and blockchain technology actually plays a very important role there too, as more things start to have to transact with other things. And a lot of these AIs are just soft things. So it's very excited about what the future holds and looking forward to the conversation today.
Fabulous. And again, appreciate my all-star cast today to help us work through and really understand this asset class shifts, day to day, week by week, month by month. And so doing a weekly show, it is entirely different every week of the topics we're covering. And so let's kick it off with our first article. And unfortunately, this company's been in the news quite a bit lately with very little positive press. So U.S. officials are considering fraud charges against Binance, the crypto exchange. They fear it could harm the crypto industry, and they are exploring alternatives like fines, non-prosecution agreements. Binance generally comments relatively clearly on these, but we have yet to see anything come out of CZ. Binance is currently the largest, I believe, cryptocurrency marketplace around the world. They generally try to run in a semi-regulated fashion, but they do in some cases run, outside of regulation. What's your thoughts, Fred? Is this a correctable issue, or are we going to see Binance potentially leave the United States?
Oh, I think Binance is going to have to leave the United States. You've got lots of issues going on there. One is they've got plenty of evidence from discovery process on emails, basically giving the Department of Justice all sorts of ammunition to go after them on these things. Blending of customer deposits with company funds, wash sale issues, a lot of ghost and bot trading, all sorts of issues. On top of it, it's interesting. I think there was a report yesterday that may have come out or the day before where basically Binance Binance International still does a huge amount of business in China where supposedly crypto trading is illegal. But it was upwards of 20% of their business comes from China. And, this is the largest exchange in the world. Over 1 million accounts was the number I read, or roughly about 1 million accounts of people located in China trading on Binance. So I think they've got a lot of challenges. The Europeans are going after them. The US is going after them. They're having to kind of hightail it from place to place. So I think, the word on the street is out that Binance is likely going to be in a weaker state, and I think a lot of the other exchanges are taking advantage of that now, and you're certainly seeing it. Binance Coin has been impacted pretty negatively too, as well. So I think, they're going to be in a world of hurt over the next 6 months, most probably.
Interesting.
I think one of the things that really worries me is that kind of implicit in this, what's been leaked by the DOJ, is that they're implying or explicitly saying that they're afraid that they might cause a run if they go after them. And as long as all the assets are backed properly, a run on a crypto exchange, now it is the largest, as you point out, but in the United States, they're not that large. And so a run, to me, if you're scared of a run, but everything's supposed to be backed, does it kind of imply that maybe they think some of the assets may not be backed or may not be accessible or whatever the case may be? I guess that's the thing that kind of worries me about leaking, that they're worried about creating a run.
Definitely the challenge is, how will people move their funds and their holdings from Binance to other wallets, other exchanges. So, if there is a massive removal of tokens from the Binance wallets to people's personal wallets, and now let's just talk about Bitcoin as one example. If their systems choke up or there's any problem, the rumor mill starts, all of a sudden, you see a temporary crash in the price of Bitcoin. Though, as you can see from kind of what happened with Curve and some of these other things, Bitcoin can dip kind of, $1,000, $1,500, and then it, over the course of a few days, kind of corrects back up to 28, 29, 30, wherever it's happened, kind of resting at the time. I think the bigger issue is for the other coins. If BNB, in the event of a challenge like this, BNB is going to get hammered. And so, what have people done with this? And this gets to this kind of same issue. I think we're going to talk about Curve a little later, where you have, as soon as you start staking and hypothecating, the trickle down effects can be pretty severe if it's not handled properly. And Binance has historically been a large part, especially of the futures and the perp market. So I think they're warranted to be cautious, but But I think the simple fact that they're talking about it means people are going to start moving funds today. It's like,
Well,
with the
we've
Signature
been
Bank thing,
through this before.
Signature may have a problem, and bang, all the money left.
Yeah, I mean, and I remember when somebody said like, "Hey, their Signature may be exposed to FTX," and we heard people say, "No, it's entirely separate. There's no need to worry anything else." And yWhales at the time had money in Signature. We're like, you know what? We're just gonna be safe and we're just gonna remove it. And lo and behold, it's unfortunately in our asset class right now where there's smoke, there generally is fire. Now it's tough because there's kind of like bad news across the board for almost anyone. But Allan, just as a quick question, as a professional trader, do you utilize Binance's chain at all?
Well, those are kind of two questions. Binance Exchange we don't use, but you mentioned their chain, which is also an interesting part of this, which is Binance Smart Chain, because that's where actually BNB does have utility. Correct. It's very different and people make this and they try to draw the link between FTT and BNB. FTT had no real usage, right. Whereas actually BNB you do use as basically the token to pay for transactions on the Binance Smart Chain. And the Binance Smart Chain is still one of the biggest chains by volume. Yeah. There's a lot of TVL. There's a lot of transactions. I think a lot of people have used it as, they go from Binance into BSC. It's also kind of the wild, wild west. So, I mean, as a fund, we're much more focused on sort of fundamentals. We don't spend a lot of time in BSC. No disrespect, but yeah. So they're kind of separate things.
And don't worry, all the hate mail comes directly to me. I'll filter out what
exactly. Send it to Jay.
So let's shift over to some positive news. There's it's lately with the crypto winter and everything else, all the implosions. We'll take any good news we can get. And so one of the largest auditors, KPMG, has submitted a recent report that suddenly shifts, I think, the public viewpoint, hopefully, of Bitcoin. So the recent report underscores the ESG benefits associated with Bitcoin, countering prevailing misconceptions. The professional services firm's analysts provides a much more positive outlooks for Bitcoin's ESG issues. This could potentially influence investor settlement and decision-making in the financial sector. Fred, as just crowned the largest publicly Bitcoin miner, this is great news for you in Marathon. How's the reaction been around your workplace and really just in your circles?
Well, this is kind of a tide of positive news that's happening, which is great. We're starting to see Texas is clearly touting, and by this I mean ERCOT in the state of Texas, are touting the benefits that Bitcoin mining has been providing to the grid in Texas this summer with these super high temperatures. The ability for Bitcoin miners to shut down, curtail, and free up all this energy for the grid has had a huge positive impact, and minimized the need for brownouts and things like that. So grid support is a key part of this. Another part of it is the fact that you see more and more Bitcoin miners going after stranded either natural gas or stranded methane in the form of either landfills or coming out of oil fields, other things like that. So when you take methane, which is 80 times more damaging to the environment than carbon dioxide is, and you convert it into carbon dioxide, you're having a huge impact on really what's damaging and driving climate change. Methane, whether it's from biological sources such as cattle, dairies, anywhere you have cows, for example, the huge production of methane that comes out of that. You can use that through a bioreactor, generate energy with it, and turn it into Bitcoin, which you're starting to see people in Europe start doing, which is a great thing. And then just what Bitcoin mining does for renewable energy. One of the biggest challenges, and you may have read FERC recently loosened the regulations on what it takes to connect a solar or wind farm to the grid, interconnect as it's called, because there was such a long backlog that if you wanted to build a solar farm today, you'd have to wait anywhere from 2 to 4 years before you could connect it to the grid. If you got your project moved along through FERC's process, which means that you may never get to profitability. And a recent study done by IEA, I think it was, said that upwards of 86% of the renewable energy projects were at risk of being canceled because of lack of interconnect. And so what Bitcoin miners do is they are able to work with a renewable energy provider, soak up that energy until such time as they have an interconnect, or even after they have an interconnect, soak up all the excess energy that they generate such that they don't have to charge the consumer as high a price to remain profitable. And I mean, I could go in and talk about duck curves and energy demand curves, but that would take a bunch of time.
For most people, to understand the uniqueness of why Bitcoin versus anything else is very different than, because you can turn off, like you said, you're on the grid in Texas, and Texas suddenly is having a weather emergency. It's not a big deal to shut it down. If you're if you're a traditional, host and you're, Amazon trying to produce S3, you need 99.999% uptime. Bitcoin is, it's a benefit. Obviously you want to have it there, but that's a big difference, is that you can say we can invest in alternative energy, but if it's actually needed to for humans or other critical infrastructure, like that's okay. And you guys have been great at shutting that down when asked and when needed.
Yeah, it's serving a huge benefit to the grid. And even in UAE, where we recently started a project, the grid operator there, EWIC, is super excited about the flexibility of our curtailment model and how that's helping them, because it's summertime there too right now, which is their peak energy consumption. And the ability for us to not have to curtail for a 10-hour strip, we can actually do it in 10, 15-minute increments, makes it hugely beneficial to them, because now they can balance their grid in a much easier way. It's kind of like you have to have balancing a grid is like having two cups, one that's empty and one that's full of water. And the one that's empty has a couple holes, which represent demand. And as you're filling that cup up, if demand doesn't increase, you eventually reach a point where you have to shut off generation because the cup will be full until it empties enough so you can add more. That's grid balancing in a kind of simple nutshell. And the ability to tell Bitcoin miners, okay, turn off. All right, you're good to go. All right, turn off, you're good to go. You can't do that with a lot of these larger thermal energy generators like gas plants, or you definitely can't do it with a nuclear reactor. And so,
no, we've seen what happens when they shut off too quickly. It's not a good thing.
Yeah. And Fred, do you think that reports like this will change the institutional appetite for investing in Bitcoin? Or
yeah, I've already seen that change, because you could tomorrow say that all Bitcoin mined going forward are going to have to be green. Well, you've already got 19.4 million Bitcoin mined of the 21 million. So if institutional investors are going to invest, they're going to have to, at some point, have dirty coins in their wallets. There's just no way to avoid it. And I think the Bitcoin mining industry, you got to realize, even when the last Bitcoin has been mined, you still need miners to operate, because otherwise you can't clear transactions on the blockchain. And so it's really more about how close is the industry to achieving net zero. And the industry today is over 50% renewable energy already. And in the US, it's closer to 60%. And it continues to improve. Meanwhile, energy efficiency continues to improve. So institutions see that a lot of the FUD that was spread out there was kind of not really correct. And you're seeing a lot more people now being more even-handed in how they're looking at Bitcoin. And even, RFK Jr. came out and said, listen, this whole climate thing with Bitcoin, just be quiet. It's so irrelevant in the whole conversation today. And I think that it's better that we're starting to see now people in government, people doing in public service, the grid operators and others really seeing, okay, yeah, this really does provide a benefit. And reports by KPMG and others like that are very helpful.
Fabulous. And I think it's helpful to the entire industry. And when we're talking about any digital assets, to have the clear leader, being able to say that they're meeting these things. Pablo, you're not as much into regulation, but I mean, you're very much about blockchain. You're very much about, digitized and tokenized assets. And I'm sure it's going to be a huge benefit for you to be able to say, like, these are things that are all encompassing of Web3.
Certainly, and this is one of the conversations that in general we've been having as a negative aspect of our industry for a long time. And I think it's more because of miscommunication and the reality of it. And again, I think all of the reasons that Fred mentioned seem very, very reasonable and rather on point. And it is true that now the conversation is changing and everything this is being accepted and it's little by little being taken away from the conversations, which is one of the small positive news that I think that we have in this cycle in the last few months in this space. But yes, very, very good. Yeah.
Awesome. We'll take it. All right, let's jump over to, I think, the biggest story of the week right now, which is Curve. I think these are some of the smartest people that we've seen in the Web3 space, math geniuses, without a doubt. And really, I feel that it's been run relatively clean prior to this. And instead of me trying to kind of walk my way through it, Allan, this is your field. This is what you do. Would you mind kind of giving a brief synopsis of what's occurred and kind of where this sits today? Because it is really creating shockwaves throughout all of Web3. DeFi is getting hit pretty hard right now.
Yeah, so I think I'll start in exactly the place you started, which is to say that, if there is sort of a bedrock of crypto of DeFi, where you feel that you can put assets and have some degree of confidence and trust in the code, Curve has got to be like, if not the top of the list, very near the top of the list. And it's just a very trusted place. It's an AMM which has very specifically been designed to exchange stablecoins, and so they have some very interesting moon math. Their white papers are totally impossible to understand unless you are pretty deep in the math. But anyway, they're extremely innovative and like hitherto, I think been understood as being like very, very, very safe. Yeah. So Sunday morning, North American time, people noticed that some of their pools are being drained. And initially, actually, Curve even said, no, it's not us. It was I'll talk about it in a sec, but it's this like composability element. Curve, there are different protocols which build on Curve and build in particularly their factory pools. So the problem was actually that a compiler of Viper, which is some of the code that was used in some of the factory pools, had allowed for a reentrancy exploit, which is a very sort of kind of common hack in DeFi. And so Alchemix, their ALETH pool, JPEG, and their PETH pool, and Metronome and their SETH pool basically all got drained. And Curve acknowledged it. They said, look, there's this problem with Viper. Viper acknowledged it. They're like, yes, there are these 3 versions. If you're using any of these versions, it's going to be problematic. That went out through all of DeFi, so there were other ones. And then you saw white hat hackers move in and start to like help and hack things. So the actual numbers behind it are actually even a little bit hard to establish, like how much was hacked, because you have white hats, you have MEV bots who took a lot of it. So there was one MEV bot called CoffeeBig .eth that took, I don't recall, but thousands of ETH, and then returned it to the Curve deployer. And then Curve came out and said, basically, this is the problem. All the other pools are now safe. Interestingly, their TVL during this period went from 3.26 billion down to 1.68 billion. So basically like a 50% cut in their TVL, because of course, if you have assets in there, a lot of people had a lot of assets in there. You're not taking chances, right? So people are pulling assets. And the biggest problem at that point was people trust Curve. People really have this like, this belief that if you put assets there, you're okay. And so it really shook confidence. And that was the jumping off point for 2 hours after Curve went out and said all the other pools are safe. The Curve ETH pool was hacked. And hackers took 7.1 million Curve tokens. And that's a problem from many different viewpoints. One, obviously, if you had tokens in that pool, you're in trouble. But also the Curve liquidity is is not very high. And so having the biggest pool or one of the biggest pools disappear also exacerbates that problem. And then the problem is the founder, Michael, we've always known one of the things that he does is rather than selling tokens, he actually goes and he borrows against his tokens. And so across Aave, Frax Lend, and Abracadabra, he has about $104 million worth of loans against 427 million Curve tokens.
30% of the market cap, I think, is what he has collateralized, right? 39%, I think, was the number they cited.
I don't think so, because I think the market cap, as I recall, is about, I think it's north of $1 billion.
According to this, he had 47% of the entire CRV circulating supply.
Yep.
But not all of that was borrowed against. Just to be clear, he has lots which is not borrowed against, and so that's how he's getting himself. I'm kind of jumping ahead in the story, but that's how he's getting out of this. Partially is he's OTC selling it at about 40 cents. The price now being, I don't know, 58 to 60 cents. But the issue there is now we've got a market with very low liquidity. We've got these huge leverage positions and the price of the token going down very quickly because of the hacks and other things. And so the problem is no longer the hack. The problem now is the price of the token goes too low, and it was at about 38 cents for liquidity. Then he did add more. It went down to, I think, about 36 cents. Regardless, if you were to get liquidated, there would probably not be enough liquidity in the system to prevent the token from going to zero. And then the problem is if you're Aave or Frax or Abracadabra, you're sitting on bad loans, essentially. And they do have mechanisms for handling these bad loans. And interesting, they have different mechanisms for handling this type of volatility. Frax, they're basically based on the utilization rate. The borrow rate goes up exponentially, essentially. And so he started paying down his Frax first. Abracadabra also passed a governance proposal, it looks like it's going to pass. I'm not sure if it has passed or not. I think it's right around now that it would pass, where basically they would put the borrow rate up to, I think, 200%, so based on different thresholds of how large those loans are. And so you have this kind of, we lost trust in this very trusted part of DeFi at the outset, and you end up with this almost existential threat across DeFi. So here we'll talk about like how DeFi is great because it's composable and we have all these like kind of financial Lego that we can use and build together. And yet when that goes wrong, it goes quite wrong.
Yeah.
That said, there is a certain healing across the system. If he gets liquidated, Aave and Frax and Abracadabra they do have their mechanisms for handling bad debt. There will be ways to handle the situation. It'll all be handled through code. The problem is not necessarily how it's handled. The problem is there's a real lack of trust now, and it's a problem.
So, and again, it's for a lot of people listening, this is very complicated. And so Allan, thank you so much for that overview. But this underscores, I think, how early we are in this asset class. Fred, your focus on Marathon is Bitcoin. But again, same as we get the benefit of great ESG scores for Bitcoin, to go across all cryptocurrencies, any bad news in DeFi will come, resonating back with you. And this is the type of ammunition that regulators and lawmakers around the world use to point and say crypto bad.
Yep. Yeah. There's always this contagion risk. I think what you've started seeing politicians more so, and even regulators. I mean, Gary Gensler, to his credit, he says, there's crypto and then there's Bitcoin. So you could call him a closet maxi potentially, but I think even politicians, the more time I spend in Washington and our public policy team spends talking to folks, it's clearly you see in the under kind of 50 crowd in Washington, across party lines, you're seeing people getting it. Okay, understand. Bitcoin is this one animal and crypto is a different animal. And I think the problem is the average person doesn't understand how these systems are related. I mean, the average person, to be fair, doesn't understand how the banking system is interrelated. And they don't understand why, if a bank has all of these U.S. treasuries on its balance sheet, why should it be in trouble when it's, most people don't even understand how bond yields work and bond pricing works, right? So these are new concepts. They tend to be somewhat sophisticated for the average person to understand. And so, fear is a lack of data. Okay, I don't understand. That means I don't have data. Okay, let me just get out of here and let me dump. And you get these responses that just happen. And, the fact is, in the digital economies and these digital networks, funds can move very quickly. They're designed to move funds at the speed of lightning. And just like with the banking crisis that, with Signature and Silvergate, these banks, you can move $1 billion using your smartphone with a couple of taps. The regulations weren't designed to protect for that. And so the systemic issues here, I think, need some thinking. And I think, unfortunately, where this is really going to have an impact is, regulators do this game of whack-a-mole, and all of a sudden now DeFi is back in the news, and things about DeFi and these, as they view them, altcoins, stable coins, bridges, et cetera. And so now they're going to start whacking that mole. Yeah. And I think you're going to see the stablecoin bills start getting a lot more discussion and debate. And that will likely be negative for the space because it's going to be quite onerous, I think, based on kind of what the Senate is talking about. I think it's going to be more onerous than not.
Yeah. So and again, I think Curve are some of the smartest developers out there. So it's a shame to see this. Pablo, you focus really on this digital assets that are utilizing blockchain, and DeFi is probably that's one of the main benefits of this is that you suddenly have liquidity for some highly illiquid assets. And this can't make your job that much easier because you spend so much time educating. We talked about this on your podcast. You don't spend as much time, analyzing the art as you do educating people about why the art is valuable. How does something, hacks like these, which are relatively common, does it affect your businesses?
Yeah, so honestly, I'm a little bit more apocalyptic than what we have heard here because, outside of the activities that I do on the art, I'm also, as Allan mentioned, a little bit of a DeFi DJ myself. And as he mentioned, this was the trusted protocol. We've gone through several months of very unfortunate news directed at people that were leaders of this ecosystem. There's more than a handful of major news. But we were at least happy that we're seeing some somewhat resilient core DeFi protocols sustaining. Now we are also facing protocol risk in the most trusted, DeFi, DeFi protocols, and it's just, I think it's very devastating. It really, really kills a lot of the, of the sentiment that we had in the space, and it certainly affects. One of the problems though is that I think that we've been championing. We have a general ethos in the blockchain space as a whole, where it's a little bit of a fight against establishment and against regulation. And while I'm a firm believer that regulation certainly stifles innovation, the lack of any regulation as well really doesn't allow serious professional protocols to companies, startups to really push the envelope and feel comfortable under a framework where they can really advance. And I think that this is a public cause where we need to be both internally more self-checking, auditing more, having more self-regulation, if that makes any sense, not jumping in, be a little bit less vigilant, a little bit more doing the proper due diligence before jumping into certain applications, and fortunately carry this over. And jumping on what Fred said before as well. The reality is that a very small percentage of the population is even financially sophisticated, which is completely fine. Everybody should know and do what they do in life. But I would say that blockchain is even a step more technical than finance in many ways, and we can't expect everybody to be blockchain sophisticated. So we need to be to put the systems in place and make the plumbing behind, making sure that the infrastructure is built so that the same way that we can interact with the blockchain and some of the applications, we have vetted systems that we know are completely safe, and maybe even with insurance and just in general the channels, so that whoever's going to participate can do so without having to do a PhD on the blockchain. And I think this is very important. Hopefully when we do that, we will start seeing what I would say more the regular folks out there, the people that are just interacting with this through NFTs, that I think it's, the low-hanging fruit for the majority of the population. Once we have these things in place, I think it's going to make it very easy when people can understand and feel safe, to interact and do so in a cheap and efficient manner. I think it's very important. So I don't take this news positively at all, unfortunately, and I will continue to work so that the sentiment is changed, because this is very, very, very important, in my opinion.
I would just add to that, if I may, that I think Pablo, he hit the nail on the head, which is, it requires a lot more infrastructure. The one thing I would say is, over the last couple of months, I've certainly become far more bullish on that. So I think if you look at EIP 4844, which will be coming probably Q4 this year, which makes L2s a lot cheaper, a lot easier to interact with. You combine that with a lot of what's going on in terms of cross-chain interoperability. You look at account abstraction, network abstraction, and I think the picture that starts getting painted through that lens is this fragmentation, this very technical requirement in order to interact starts to dissipate. And then probably there's a little bit more flight to quality around, where people interact, how they interact, some of the security that's built into, even Consensus launched some new fuzzing techniques that I think are supposed to be quite effective. So we're getting there from an infrastructure point of view. I think the next, if this blockchain technology, which I think we all believe in, is really going to become pervasive and is going to solve real world problems, to me, the infrastructure that we're seeing now being developed is going to solve a lot of these issues in the long run, where we start to see, a vast number of new users coming in.
Yeah, and
probably a lot of them won't know they're using blockchain technology.
100%. I think a lot of
the refreshing part.
Yeah, to echo what I think every one of you guys said, common sense regulation is designed for consumer protection. And that's really where we need to get to, is have this blend of the technology is great, but no matter how amazing your white paper is, it's never going to, be kind of a regulator going in and poking holes, trying to make sure that everything is safe and that these audits occur. Shifting over to, I think, the scarier news, so we had about $1.5 billion hack with Curve is what we saw.
No. The amount hacked, I think, is about 47. It's hard to tell. It's about 47 million, maybe 70, but still some of them were white hacks. We don't know which teams actually got it, but it's less than 100.
Gotcha. It lost, I'm sorry, about $1.5 billion.
TVL went from 3.2 to 1.6 because people were pulling their assets out to keep them safe.
So let's go with, I think, the scariest story of the week. Tether has increased reserves by another 850 million to 3.3 billion. And Tether, let's just read off some numbers right here. So Tether made profits of over $1 billion for the last quarter. To reference that, BlackRock, the largest asset manager in the world, made 1.6 billion in that same time frame. 85% of its reserves are liquid. These assets are held in cash or cash equivalents. And the most terrifying thing is that it currently has, I think Tether right now is about $89 billion. 72.5 billion is in U.S. treasuries. It now owns more U.S. treasuries than Australia, the UAE, and Spain. Fred, tell us how terrifying this really is when we talk about lack of regulation and oversight.
Well, I think part of the challenge is what are they holding the other 15% in? Because in the event of a run on Tether, think of it this way: if you're a huge bond holder and you start liquidating bonds, it can be very risky. So typically, most reserve structures would be based on a ladder that kind of lets you have cash that'll handle most of the needs of a potential run. But based on the profit numbers, you can see that clearly they're putting a lot of money into things that are generating yield for them. So whether that is, T-bills and treasuries that are paying them, some small percentage rate, or whether they're actively trading, or whether they have commercial paper or junk bonds that are paying them 25% on that 15% that they have. The lack of transparency creates definite risk there. And we've seen Tether depeg in the recent few months on a couple of occasions. And what is the primary vehicle that people would use for moving a lot of capital off of Binance, for example? Well, it's going to likely be Tether, right? And so all of a sudden you have a run on Tether, and then that Tether goes somewhere and has to be liquidated. And so, I think it's anytime you have a stable coin that is as pervasive as Tether is and as opaque as Tether is, there's risk. And so what's interesting, though, is after the FTX issues and the bank issues, because USDC got stuck with funds at Signature, USDC's market share, if you would, for lack of a better term, of stablecoins has decreased, and Tether's only increased. And so they're just further increasing the risk. The other thing is that, Tether holds a lot of Bitcoin. They own a couple $1 billion worth of Bitcoin at this point. And so if they had to do a liquidation, it would even flow over not just the psychological risk of a depeg of Tether, but now you have Tether dumping Bitcoin. Right. So
I think the Bitcoin they hold, though, is part of their own personal treasury, not as part of their reserve assets, right?
Yes, in theory. But Allan, if there's a run on the bank, you're going to liquidate what you can liquidate to raise cash, so you don't depeg and you don't have these other issues. So
the other thing that's kind of funny, and I just mention it because it's, I can always, it's hard to wrap my head around, but part of the reason there was such a run on USDC was because they were very much more transparent.
Yeah.
And there have been runs on USDT, but because their opacity is part of their saving grace, because everyone's like, well, I wouldn't, even if you tried to depeg it, and it has depeg, but not very seriously, not nearly as seriously as almost any other stablecoin out there. You wouldn't really know what you would need or how much you would need or how you would need to do it, because they have quite a lot where they're like, well, we're not going to tell you how we're holding this. So you can assume that you would need a massive arsenal, just because it's just not very transparent. I'm not saying it's the right thing, just that seems to be one
that was what took Luna down, was Luna was saying, here's what we're going to do, and here's what we're doing today. And it gave the attack vectors for people to say, okay, when they do X, we're going to do Y. And they were able to kind of, do kind of really advanced attacks during those metrics. So I like that Tether's being transparent, but they're telling us, a quarter later, like, here's what we did. It's been done. It's solidified. And we're already getting ready to make some new moves.
If I may, Jay, sorry.
Please.
The one other interesting kind of stablecoin thing that's going on was actually related back to Curve, because Curve USD, which was launched not that long ago, a month ago or something, has basically been growing at a very quick pace. And it's again, this team is very innovative, very capable. They've designed like a liquidation engine, which really makes a ton of sense, and which the community seems to be using heavily. Even during the hack, the TVL of Curve USD went from about 130 down to, I think, around 110-ish, and it's edging back up already. And so, again, you see these like new innovators in the stablecoin space. Go at Aave is another one that I think are going to be part of the discussion going forward.
Fabulous. And one of the reasons why we're all here is, again, we want to have uses for blockchain. We, stable coins are, nobody wants to trade stable coins back and forth all day. We want to be able to buy things. And so, Pablo, it's your time to shine here. From April 2021 to July 2023, the total value of sales involving NFTs in the art segment, has fluctuated significantly. In 2021, it capped out in a 30-day spread of about $78 million of sales and trades, to this past July, in that same 30-day spread, about $14 million. Now, clearly, we were seeing, the peak of the peak of the bull way back when. But how are you seeing the asset class evolve? Because the movement of art, which is your specialty, is really leading way to real world assets, and all this infrastructure that we've been talking about today is really what this is designed for, is to overtake Swift.
Well, this is obviously a reality, and it's important not to it's important not to dismiss it. But I think that it was both expected and B, part of a larger trend that we're not only seeing in NFTs, but in general the art world as a whole is also experiencing a significant downturn, as many other similar asset classes I think across the board are experiencing now. What I would say, though, is that these overall volumes figures only paint a small picture of what's really happening. On the flip side as well, we're seeing a humongous consolidation across quality and across certain projects that are indeed pushing the boundaries. What I've always called, and I think I discussed with you, the decoupling, where a lot of the assets are trending towards zero, but those. And we can get into the details of how we define the better assets, but those quality assets are really increasing in value and on interest and on establishment across the board. It is also important to note that we've already started to see the inclusion of both major institutions as well as there's different companies and groups that are really starting to utilize the technology properly. And including them into their everydays. I cannot mention the details yet, but there's going to be a major announcement by an institution, I think tomorrow or early next week, about again inclusion of more digital art into. It's all I can say for now. Just in general, I think that we're seeing the major steps on the institutional side that are really establishing and making sure that this industry is here. On the other side, and it's something that might not be picked up by sales and the volume on chain, we have seen the entrance of significant collectors or different players that are really taking now large steps, let's call them, to have a participation in this ecosystem. And again, on the quality side of this asset class, we're seeing even some records happening, and some, and some further activity than on the overall ecosystem. I think most of these volume metrics are by projects that were dwelling between the PFP and the art ecosystem, and which has seen a significant decrease over time. But again, the figures and the activity is clearly lower than it was at the peak a couple of years ago. As with any nascent market, this is a little bit expected. But I am very, very confident, if you want to call it bullish, on the establishment and the continuation of in particular digital art as a real asset class, and as a whole, on the ability of NFTs to really become a very, very, very ubiquitous in society.
Love that. And so right out, let's go ahead and talk about some of the technologies that, we were talking about earlier in DeFi that are now being applied to NFTs in a variety of ways. So Etihad Airways is releasing a Mission Impossible themed NFT collection, allowing holders to earn travel rewards like airline miles, priority check-in, lounge access by staking their assets. So when we hear about staking, we generally think of Ethereum or anything else. And now they're basically allowing, which is I think what everyone thought was going to happen, which is to tokenize these memberships and kind of allow them to be traded, bought, and sold. While right now it seems to be on a closed loop, private market, eventually that they could go out and someone says, I no longer am flying, or I am flying, and be able to have value for this. How does this type of thing work? And are you seeing, good adoption in these techs?
Yeah, again, I think that we saw the first wave of companies really experimenting with the NFT ecosystem over the course of the bull market in the last cycle. And unfortunately, I think that many of them, the majority of them, moved a little bit too quickly and went with the time rather than actually develop a proper strategy of how to further engage with their audience through the use of NFTs. Again, I think that the space has heavily matured since then, and now we have, as Allan was mentioning before, a little bit better infrastructure for the participation of more and more, let's say, non-technical people in the space, and I think that the second wave of companies coming into the NFT ecosystem and further engaging with their audience, it's going to be more positive. I don't know the exact details around the Etihad proposal, but again, I am sure that they have learned from the activity that we have seen in the past, and that and again, they can apply it to this. We have seen also a at least in gaming application, in loyalty systems, etc., a move as well away from Ethereum into other chains. We'll see how long lasting this becomes, even though there has been consolidation around anything else around Ethereum. With this, I've been seeing in particular games going more towards other chains, and I'm expecting to see what the second wave will bring. I have been not only from Etihad, though. What I would say is that I've been in conversations. I cannot name which ones, but there are several. More and more, I'm aware of more than a handful of major global groups that are certainly implementing the Web3 strategy, as we speak right now.
I love that. And there's, just to dip a little toe into gaming, there's rumors now, there's no article that confirms it, that Grand Theft Auto 6, one of the largest, kind of massive multiplayer games in existence, has Web3 integrations built into it. And then we've also heard Elon's Twitter, renamed X, is going to have some major, crypto Web3 integrations in it as well. So I think it really does bode well for, the thought of these reward programs, the various different tokens, whether or not that they have any real world value, but actually have real world access or real world utility, just bodes well for the entire ecosystem. But clearly we've seen a couple problems in here. For the last story, and I think really the most exciting one to me, but it is kind of adjacent to Web3, is the discovery of this new compound called LK99. And Fred, I'm going to give a quick overview, and then I'd love to hear your thoughts, because you're one of the largest consumers, I know, of some kind of this type of semiconductor. So LK99 could lead to room temperature semiconductors with no energy loss. If confirmed, this breakthrough could revolutionize technology from efficient computing to sustainable energy solutions. Preliminary testing by 2 research teams has shown promising results, and Chinese researchers have replicated the manufacturing process per the white paper. This is, I keep seeing people on Twitter and variety else say this could be the discovery of the century, if not more. And I'd love to kind of understand, Fred, what are you seeing? Because you spend a lot of time in this field.
So the reason electronics are hot or warm when you use them is because of friction. And it's this issue with conduction. You lose energy in the transmission of energy, and if that energy shows up as heat. So that's why, transmission lines in power systems, up to 40% of the energy we generate in this country is lost due to conductivity issues in the grid. And so if you have a superconductor that doesn't need to be super cooled. So most quantum computers, for example, are kept in very, very cold environments using liquid nitrogen and other things. When you supercool a conductor, then you have less energy loss, which means that it consumes less energy, which means more energy can be applied to power the thinking process, if you would. Superconductors would allow, Bitcoin miners obviously to be much more energy efficient, all computers to be much more energy efficient, would allow the grid to be much more energy efficient because you wouldn't have power losses, and all sorts of other things. Maglev trains and cars would become commonplace. So they're huge issues. I think the challenge with this is kind of like the challenge around fusion computing, in that our fusion nuclear energy generation is that, somebody says they've done it, then, you need to have peer reviews. And, until peer reviews come out from people who are deemed to be authorities, then you kind of have to take this with a grain of salt, because it really is the holy grail of, how semiconductors would be built, how all sorts of electronics would be built, and electrical systems. would be built. With no energy loss in a system, the amount of input energy would be so much less, and we could go to net zero overnight, technically, with this. But it's meant to be a very simple recipe that can be mixed on a desktop, a kitchen, I think they say in the white paper. And I'm surprised nobody else has kind of said, "Yep, this works." Absolutely works. So,
well, don't worry. I saw it on YouTube. I saw someone do it on YouTube, so we're good.
Yeah. So when I see it on Good Morning America and they do it there, then we'll know it's true. But I think super exciting, but you have to take it with a grain of salt until such time as there's data to show that it actually works.
Fabulous. Well, I think our panel so much for all of your time today. Truly, like I said, there's so much going on that we had a good combination of good news, some concerning news, and some really terrifying news across the board. This is a weekly episode that we do, and I appreciate all of your time today, Pablo. Absolutely fabulous. Hope all is the best. Where can people find you if they want to learn more about you and your projects?
Usually I'm quite active on Twitter under Pablo R. Fraile, Fraile. And I'm usually communicative through there as well.
Fabulous. Allan?
You can, our website, goldenpear.capital, or you can reach me at email, allan@goldenpear.capital.
And Fred, we just have to turn on our TV and you're everywhere. But where can people find you if they want to kind of follow along with you?
Yeah, Twitter at FGTHIEL or fred@mara.com.
Fabulous, guys. Thank you so much for everyone watching. Appreciate the time. These are ongoing series. And for everyone, we will see you guys next week.
Great.
Thanks, everyone.
Thank you.
Yep.